Hey guys, welcome in this video. I hope that all of you are doing great. So in this video, I'm going to break down the last trade that I took on the market, which I closed this morning in a pretty nice profit. So I'm going to show you guys literally everything about the trade. So fundamental analysis, technical analysis, when did I take the trade, for what reasons did I close the trade this morning. I'm literally going to explain you everything. And the goal of this video is simply to bring you guys as much value as I possibly can, right? And my goal as well is to show you guys, right, that if my content that is free is so good, imagine the content that we have inside of our coaching program, right? Which of course is even better, right? So guys, I'm really excited to get into this video. Now, just before that we start, I just want to make a little clarification. I'm going to explain everything in details, but at the same time, I will really try to make it as clear as possible, because I know that some of you guys have very little experience in trading. Some of you guys have a lot of experience in trading, and my goal is simply that everyone can understand this video. All right, so if you guys are excited for this video, please leave a like. I would really appreciate it. It helps me grow the channel, and make sure as well that you're subscribed if it's not already done. And with that being said, let's get right into it. So the trade that I took was on USDCAD. Okay, so I shorted USDCAD, which means that I was betting on the downside of this Forex pair. And essentially, right, as I said, I will literally explain you guys everything about the trade, how I got the idea, how I managed the position and stuff like that. So first of all, all right, this fundamental idea came to my mind a couple of weeks ago. Okay, and essentially, right, just to put you guys in context, so for example, if we look at the S&P, right, which is I would say that the main stock market index, right, we can see that since the beginning of the year, which was around here, we are in a downtrend and we are making a correction. Okay, and essentially the idea is that in the last multiple months, right, inflation has been going higher, and because of that, the central bank, so essentially, right, the Fed in the US, need to hike interest rate in order to slow down the economy and slow down inflation as well. Okay, so that is really one of their main goals in terms of the central bank, to simply keep inflation between, I would say, 2 to 3% maximum. Okay, and now inflation in the last couple of months has been running as high as like 9%. Okay, and so that is way too much in terms of inflation. It puts a tremendous pressure and stress level on the economy, and so because of that, the Fed is essentially obligated to hike interest rates to, as I said, slow down the economy. And if the economy slows down, then inflation will also slow down and start to come back down. And so because of that, right, the fact of raising interest rates, well, as I said, it is negative for the economy, and then the stock market also went to the downside. And that is the reason why we have been in this correction right here, simply because, well, as I said, the economy is not doing as good. We have a monetary policy with high interest rate that is a bit more restrictive, and because of that, the market was pricing in this idea, right? Now, if the stock market goes down like that, usually if we look at the dollar index, so the US dollar, right, we can see that we were in a very nice uptrend, okay, simply because it actually increased demand for the dollar as people get out of the stock market, right? And raising interest rates is something that tends to be positive for a currency, okay? And that move right here to the upside is a move that I've been trading essentially all year long, okay? I've taken like a lot of trades to the upside on the dollar, and I've made quite a lot of money. I think it's even the main idea that I've traded this year and where I've made quite a lot of profit. Okay, so this was a very good trade for me, but at some point I knew that this uptrend right here would have to come back down and make a bigger correction, right? Because look at it, right? I mean, it was literally just doing this, right? Like, it's not always going to be as easy as that, right? Like, it was going up very precisely. Like, it was quite easy, I would say, to identify the big corrections and the breakouts and stuff like that, right? And what you have to keep in mind is that there is no free money on the market. And so what that means is that the more it was going up, the less confident I was in the move, because I knew that at some point it would have to come back down and make a bigger correction. Okay, And as I said, I've been trading it to the upside multiple times, but when we got around these levels right here, so when we started literally to break above this trend line here on the DXY, this is when I was like, wow, it's really getting stretched. It's really just starting to be a bit like euphoric, I would say, in terms of a move. And this is when I was really like, okay, at some point this will make a bigger pullback, it's going to make a bigger correction, so I want to be out of the long positions, right? So I want to be out of the market to the upside, and maybe that even if I get an opportunity for the downside, then maybe that I would want to get in a trade. Okay, so essentially this was the context in which we were evolving in the last couple of months, right? Now, essentially what happened is that a couple of weeks ago, we had Timmy Ross and Dali, so two very important people. Timmy Ross is essentially an economic journalist, and we've seen in the past a few moments in time where essentially the Fed gave information in advance to Timmy Ross for him to leak the information to the market so that people would know in advance what the Fed was most likely going to do, and then the market would digest this information a bit more slowly, essentially. Okay, so Timmy Ross is always someone that is very important to watch because we can see, you know, sometimes in advance what the bank could do because of him. Okay, so that is a very important character. And the other person that I said, so Deli, is a Fed voting member for interest rate, so of course she is very important as well, right? And essentially what happened is that a couple of weeks ago, they both came out together on the same day around the same time, and they said that eventually, right, the Fed will have to slow down raising interest rates. They will need to, you know, maybe even take a pause, right, and to see how this current hiking cycle will impact the economy. Because something that is important to understand is that when the Fed hikes interest rate, okay, especially as much as they've done in the last couple of months, this has a delayed impact on the economy, which means that the impact of this hiking cycle will only start to be seen right now and in the next couple of months. Okay, and so they will need to take a pause to see how this hiking cycle will impact the economy and then readjust according to this, right? And so as I said, a couple of weeks ago, they both came out together and they said that essentially this is where they were heading to. Okay, and when I saw this, I was like, wow, I mean, it cannot be just a coincidence, right? It cannot be just magically, right? They both came out together at the same time and said the same thing, right? It has to be planned. It has to be the first sign that it's going to actually go in this direction quite soon. Okay, and so when I saw this, I automatically shifted my mind when it comes to the dollar, and I was like, okay, we've probably hit a top for now, and we're most likely going to go into a correction. Now, we didn't have any kind of confirmation of this, so of course I didn't rush to get in a trade or anything like that. But then after that, the week after, we had the Fed event, where this event in terms of the Fed, right, for those of you guys maybe who have followed it, right, it was kind of all over the place in the sense that, you know, sometimes Powell was like, okay, we will hike rates, we prefer to over hike, we want to kill inflation and stuff like that, right? So he was really aggressive in this direction. But then at the same time, he was like, yes, we started to talk about slowing down the path of raising interest rate. We started to think about taking a pause and stuff like that, right? So he was kind of playing in the two directions. And the reason why he was doing it like that is simply because I think that at that moment in time, the Fed also didn't really have an idea of how inflation would evolve, and they did not want to just, you know, push themselves too much in one direction. And so that if the other direction would be the one that develops, then the market would need to readjust completely and it would create a mess on the markets, right? And so I think he wanted to be just kind of more neutral, which is why he pushed in the two directions, right? So at that point, I was not really feeling confident as well. I already had tried to sell the dollar on Euro USD by going long on this Forex pair. But when I saw this kind of push back and forth, I decided to close the trade at break even. Okay, so this was the first try of the trade, which, as I said, I didn't make money, I didn't lose money. It was a break even trade. Okay. Now, after that, last week is when it got really interesting, because last week we had the inflation numbers. Now, let me show you guys what happened with this, right? So essentially, last week, as I said, we had the inflation numbers. And so this was on Thursday morning at 8:30 Eastern time, okay? And so first of all, something that is really important to understand is that when we have such a big and important news, let's say on Thursday, I am most likely not going to take any trade for the whole week before this event, right? So when I saw that this was coming up, right, I was like, okay, I will most likely not trade on Monday, Tuesday, and Wednesday, and that's exactly what happened, right? So last week I didn't do absolutely, I did literally like nothing on the market, right? Like I was not even on the charts. I was literally just following a bit, right, with just one eye, right? But I was really not doing anything, and it was a pretty, let's say, slow start of the week, and we essentially just had up and down, and that makes a lot of sense, right? Because think about it for a second, right? Let's say that you are a professional trader or a professional portfolio manager, right? And that you know that on Thursday we have one of the most important news, okay? Are you going to take big positions right before this event, right? Like let's say 1 or 2 or 3 days before? The answer is no, okay? It doesn't make any sense to take a trade before this event. It's much better to just wait and see what happens, and then you can adjust accordingly, right? So I knew that the moves that we would have at the beginning of the week would not really be moves that we could trust, if that makes sense, okay? And so that's the reason why I was really not interested in trading anything before that. And the trade that I took, as I said, was on USDCAD. So let's just use this Forex pair, right, as the example. So as you guys can see, and I'm also going to talk about the technicals right here, so break down the chart with you guys. So as you can see, right, if I just bring this back, let's say to here, okay, so we had the breakout of this massive level here, right, the week before CPI, and as you guys can see, this is a massive level. We have the 382 Fibonacci, we have this horizontal level, we have 2 trend lines, and we have the 50 moving average, right? So that's a massive level, and that's the reason why I was very interested in USDCAD, simply because I knew that if we would definitely break this level, then the next level to watch would be this one, where we have the 618 fib, the 100 moving average, and this horizontal level, right? And so that means that I actually have quite a good amount of space between this level and the one below, okay? Which gives me a good potential profit here, okay? So essentially, that's the reason why I was interested in this pair. And so as I said, right, for the first couple of days of last week, as you guys can see, so this was Monday, this was Tuesday, and this was Wednesday, right? So we opened higher, we went back down, we went back up. So we essentially just did up and down around the same levels. And again, it makes sense because no one is going to take a position before the actual event. It's much better to just wait for this and wait for the data, okay? So essentially, we had this correction. And so I was waiting for the data on Thursday morning, right? Now, to keep it simple with you guys, if I show you again the calendar, right, here is the data, okay? And essentially, we will just look at CPI year to year, okay? We could also look at the month to month and the core CPI month to month, but I just don't want to make it too complicated for no reasons, right? I'm going to simplify this for you guys, right? So essentially, we had CPI data. Now, if we look at these numbers right here, we can see that the previous data was 8.2% inflation, and we can see that what was forecasted was 7.9%. So we were already thinking, right, the market was overall thinking that inflation would start to come back down, but of course we didn't really have a confirmation before, so we needed to wait and see, okay? And essentially, a couple of things could have happened right here. So the first scenario was that if inflation indeed comes back down and maybe even more than what was anticipated, then the market would move a lot on this. The stock market would go up and the dollar would come down, okay? So that was the first scenario. Now, the second scenario is that if inflation was still quite strong, okay, around, let's say 8%, maybe 8.1, maybe 7.9, even that, right? It would maybe not give so much confidence for the markets that rate hikes would stop or slow down. And because of that, maybe that the dollar would have kept going higher and that the stock market would have come back down, okay? And so as you guys can see, essentially the first scenario is the one that actually happened. So we had 8.2% inflation, and for this month we had 7.7, so even lower than what was expected. And so as soon as I saw these numbers, I was like, wow, it's actually a pretty big drop in terms of inflation. What does that mean? That means that the Fed is most likely going to slow down raising interest rates quite soon. So what does that mean? That means that stock market is going to go up and the dollar is going to come back down. And what is important for you guys to understand, right, is that when we have, you know, these shift in terms of fundamentals, right, the markets will always price things in advance, in the sense that if we know that it is very likely for the Fed to slow down raising interest rates, the markets will move based on this idea in the present moment, even if this will only happen in the next couple of months, right? So the markets will always move in advance. Essentially, that's what it means, okay? So when I saw these numbers, I was like, wow, okay, the dollar is most likely going to get crushed on this. And the stock market is going to rally, right? And so as I said before, right, what I was mainly looking at was USDCAD. And so if I show you guys, let's say on the 1 hour chart, just to give you some context on the trade, right? So this was the correction that we had before the event, right? Now follow along with me, okay? Look at this axe right here, okay? So this was essentially Wednesday at 4 p.m. Eastern time. So essentially, right, about like, let's say 16 hours before the actual event, pretty much, okay? So let's just speed this up a bit, because what happened here during the night was not really important. As I said, everyone would wait for CPI anyway. And so when I woke up in the morning, right, the market was trading around here. Okay, so this was, no, just a bit more. Okay, so this was essentially around 6 a.m. in the morning. This was 7 a.m., right? So the market was trading around here before the actual release. Okay, and the way that I was looking at this was simply that this was a impulsive move to the downside, and that this was a 1, 2, 3 correction all the way back to here. So this is one of the patterns that we trade inside of our coaching program with our students. And so essentially, right, the breakout level that I was interested in was this one. And so the idea was very simple. If inflation would come back down, then it means that the dollar would go down as well. And it means that USD-CAD would also go down, okay? And so to make it simple, right, we had the inflation numbers. We had a massive drop, as you guys can see. And actually, right, even if this was the breakout level, what is important to understand is that I was watching other Forex pairs at the time of when the news hit, and we already had a breakout on other Forex pairs a bit earlier than on USD-CAD. And so what that means is that I already had, in a way, the confirmation that the market was breaking down, even if this specific Forex pair was not breaking down just as yet. It was not really important because other ones were actually going. And so what that really means is that I was able to position myself a bit before this breakout level, so around here, okay? So this was my entry with the trade. So I got in the trade as soon as I saw the numbers, because it was such a big change that I could not wait for another pullback or anything like that. I had to get in the trade because I was expecting a lot of volatility, okay? So I got in the trade right here. My stop loss was above this previous high, so the high that we had before the event, essentially, right? It's pretty simple. And then in terms of the target for the trade, I had 2 targets on the daily chart, okay? And I already showed you guys these levels, right? This was the first level and this was the second one right here. In terms of risk-reward ratio, I had around 1.3 for this one and around 2.8 for this one. Okay, so this was a much better risk reward ratio than this level right here, but I was fine as well with just closing the trade at this level here, because you know, something that is important, right, for you guys to understand is that I've been trading for like almost 8 years at this point, and I'm now trading with a pretty big capital, right? And that means that I'm not really interested in getting the biggest risk reward ratio possible, right? I know that sometimes people on the internet, people on YouTube, right, Instagram and stuff, they want you to believe that you can easily get, you know, 5-to-1, 8-to-1, 10-to-1 and stuff like that. If you shoot for these risk reward ratios, okay, your win rate, so how many trades you win, will be very, very, very small, and you will have a lot of break-even trades, a lot of losses and stuff like that. And the problem with such a system is not necessarily that it cannot work, it's just that it's going to be less consistent, okay? And to me, as a trader, right, who works with a pretty big capital, what I care a lot more about is consistency, okay? Even if I don't get these massive home runs, right, all the time, I'm completely fine with that, because I don't need to have such big risk reward ratio to make a lot of money, because I have a big capital, right? So I'm very, very fine with these kind of risk reward ratio. If I have a good probability to win the trade, it gives me very consistent results, and that's how I'm able to grow my account over time, okay? So essentially that was the idea. So this was on Thursday, sorry. Then after that, Friday came, we kept going down. We didn't fully reach the target, as you guys can see, so I didn't close the trade. Then after that, yesterday, so Monday, we had a bit of a correction here, so that's completely fine, right? It's not really a problem or anything like that. And then this morning, we had a push to the downside, and this is when I closed my trade. Okay, now as you guys can see, we did hit the moving average, which was really the first obstacle of this zone right here, as you guys can see. Okay, so this was the first obstacle there. And we also had the low of last week, right? So this was overall a big level. And what happened this morning is that we had PPI, which is another way of measuring inflation, which came out and actually created a lot of volatility. As you guys can see, the markets moved a lot this morning. Okay, and normally it's not really a news that moves so much the market, so I was a bit surprised to see so much volatility. And what is really important to understand, right, part of the reason of why did I close the trade here is simply because this move on the dollar right now is a bit too stretched. It's a bit too extreme, okay, in the sense that, you know, if we look at the DXY, right, we can see that it was a really big move, right? I mean, if we compare it, let's say, to the last couple of months, right, like look at how fast it went down, and we already reached the big level on the DXY. We reached the big level as well on the euro with this moving average and this horizontal level right here. Same thing for the pound, same thing for gold right here, same thing for AUD USD, NZD USD and stuff. So we had a lot of pairs right now that already reached, let's say, the big level that I was looking at on these moves. And so what that means, and the reason why that is so important, is simply because if all of these markets have already pretty much reached the big level, right? Well, what's the probability for USDCAD to go you know, from here to here, right? Is it going to move alone and all the other pairs will just start to make a correction? Most likely not, okay? And so because of that, I was like, you know what? Let me take my profit on this first big level here, and let's wait to see what happens, right? And I think it was a really good decision because as you guys can see, let's say that I didn't take my profit right here, my stop loss, I had moved it at this level here. So I would already have been out of the trade, but with a much smaller profit than what I was able to get right here. So I actually managed the trade pretty nicely, and I was able to get out of the trade right here. So as I said, it broke the low a bit, it touched the moving average, then I watched it for a couple of minutes. I was looking at if the market would break it or not. I saw that it was not really breaking. We were already like back to here, so I closed the trade there instead of waiting for the reversal, and that was overall a pretty good management for the trade. And yeah, I mean, that's pretty much it. That's about it, right, for this trade right now. So as you guys can see, I had a pretty strong fundamental idea, which I really took the time to break down in details for you guys to make sure that everyone understand, and the technical as well, that were aligned with the fundamental idea. And the goal, as I said, right, with my trades, it's always the same thing: fundamentals for the direction, technicals for the timing, putting them together, and that's when I have a trade. All right, so I hope you guys enjoyed the video. If you have any questions, right, you can write them in the comments and I will take the time to answer you. Please leave a like on the video if you did enjoy it, right? You can also share it around with other people. And on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.